That is not a perfect result, but for the euro, that is a good step into the right direction. The fiscal union is a precondition for the creation of Eurobonds, which most probably will be implemented, but at a later stage. The separate contract shall be negotiated until March, which is a tight timeline, as the mechanisms of abandoning sovereign rights to a ruling European institution has to be agreed. Equally controversial is the requested household consolidation. Simple and radical cost-cutting is definitely also not the cure to the disease and the answer to the current challenges, and I will come back to this topic a few minutes later. All this needs time, ladies and gentlemen. The contracts have to pass local governments at times where local governments have not held the European flag high. So we need time to change the system when financial markets do not allow for long change processes. They will continue to put indebted countries into the limelight of negative reporting, and the rating agencies will do the rest. So we need time and interim measures. Time and interim measures. Bond purchases of the EZB will remain a vital pillar to provide countries like Italy and Spain with the time to consolidate their budgets and undergo reforms. I'm absolutely confident that all these countries, besides Greece, will be able to restructure in such a way that they will be able to come out of the crisis as long as they can refinance themselves at acceptable rates. And as long as the prices jump up for countries like Spain and also Italy to 6.5%, no country can refinance its debt at such levels. These countries need time to breathe and to normalize their refinancing rates. So in other words, money that will not be coming out of the EFSF will need to come out from the EZB. Now you will ask me then, of course, do these bond purchases endanger the purchasing power and the stability of the euro? In theory, yes. But what is happening at the moment, ladies and gentlemen? The European banking system is cutting back lending under the pressure of new regulations. And credit demands shrinks given the unfolding recession. So no reason for inflation. Therefore, less money than before is coming into the real economy, and EZB bond purchases will help to fight deflation, which is a bigger risk than inflation at the moment. Ladies and gentlemen, let me shortly summarize on what I have said so far. First, a breakup of the Eurozone or the bankruptcy of large Eurozone members is extremely costly for everybody and therefore very unlikely. Second, we have means to fight the crisis, but we have just to use those means. Consequently, I have little doubts that politicians will continue to go for a win-win situation of stronger integration and solidarity. So far, so good. But all reforms requested singularly concentrate on cost savings. But Europe, ladies and gentlemen, needs both. Europe needs budget consolidation, mainly via structural reforms, as well as growth. We need to create jobs and provide future-oriented programs, as social unrest is the biggest threat in case of rising unemployment and ever-enlarging social differences. This also means that any EU governance reform, such as the proposed financial union, has to take cyclicality into account and avoid pro-cyclical measures. And this is what I don't see so far. The EBA regulation in this context of growth, I would like to highlight in the next 2 minutes. In this context of growth, I want to seriously oppose the new regulation of the European Banking Authority, which has been published on the 27th of October, that all systemic relevant banks have to show a Core Tier 1 capital ratio of 9% by June the 30th, 2012, not 2016. Regardless whether they are exposed to peripheral countries and write-offs or if they are not. Now, please, ladies and gentlemen, do not understand me wrong. I'm absolutely in favor of stabilizing the financial system and reduce the inherent risk to the global economy. But this needs to be a process over a certain time. That doesn't work from one day to the other. Therefore, new global banking regulations, namely Basel III, have been developed after Lehman, and they have foreseen a bundle of measures, including a gradual step-up of Core Tier 1 capital over a longer period of time. Now, according to the EBA regulations, banks have to fulfill Basel III targets by 2019 within a period of 9 months. 2019 and 9 months now. Higher capital ratios, ladies and gentlemen, in the middle of a debt crisis is absolutely counterproductive, as banks will be finally forced to reduce lending. This is what will happen. Morgan Stanley, not my analysts, have judged that this, as a consequence, will lead to a deleveraging effect between 1.5 and 2.5 trillion euros over the next 18 months. And it will, of course, have a serious long-term effect on the economic development of Europe. Now, this crisis, ladies and gentlemen, will not be solved by increased capital requirements on short notice, as the core of the problem is the mistrust of the markets and the solvency of public debt. It's the indebtedness of the country which counts. And the key problem is liquidity, and only second to that, capital. Banks usually go bankrupt, if they go bankrupt, not because they do not dispose of enough capital, but they have no enough liquidity. This is an iron rule as long as I can think. Enough about the euro. Give me another 2 minutes before I come to the end to talk about Central and Eastern Europe. Because you have heard that our banking group is among the leading ones in Central and Eastern Europe, and therefore I would like to spend a short time on that subject. Now, in the context of this new EBA regulation, some international media commentators have written about deleveraging effects, which will be especially negative for Central and Eastern Europe, and will then also, in consequence, be a great risk for the stability of Austria due to the engagement of Austrian banks in Central and Eastern Europe. Now, let me also try to clarify this issue here. And of course, in spite of the fact that I'm thinking traditionally very positive about the development in Central and Eastern Europe, also Central and Eastern European economies will be affected by the crisis. But ladies and gentlemen, Central and Eastern European countries are much better prepared than in comparison to the time before Lehman. They have used the time carefully and diligently to restructure their finances. Many of those have issued bond issues in order to stretch their repayment maturities to maturities between 5 and 7 years. They have drastically reduced, all of them except, with the only exception of Albania, the current account deficit, so they are depending much less on cross-border financing. They are very competitive. Central and Eastern European countries are usually, in average, much better on educational terms than any EU country, high educational levels. And finally, and I have many other reasons, of course, but I don't want to bore you, in average, Central and Eastern European markets are much less indebted than average European markets, with the exception of Hungary. In reality, it is less than 50% of the average indebtedness of Western Europe or EU countries. Now, what is the reason why I'm constantly and consistently positive about the future development of Central and Eastern Europe? It is, ladies and gentlemen, nothing else than the inherent conversion process that continues to run. If you are still living as a young man of 26 years with your parents and your grandparents in an apartment of 65 square meters, then you really want to have your own flat. And this is the inherent motor of conversion. You want to have it, you want to see it, you want to make it, and they have the brain to do it. The most intelligent people I hire in my group of 65,000 people worldwide is in Russia. And those, ladies and gentlemen, unlike it is reported, or still the belief of people living somewhere, I don't want to be more specific. I mean, these are those people that are writing even in top newspapers that call themselves commercial papers about Central and Eastern Europe as an ex-communist bloc. Ex-communist is okay, but what is a bloc? When the Slovaks are so much different from the Czechs than the Viennese from the Bavarians, or the Hamburgians. No, Hamburg is a wrong example. It reminds me to Wiener Schnitzel, but this is a different comparison, what I don't want to make. But to stay serious, what I want to say is with these inherent transformations, growth in Central and Eastern Europe will continue 2% ahead in average of EU Europe. That means Central and Eastern Europe will continue to play a motor function for growth in Europe. Now, ladies and gentlemen, I will come to an end. Besides the very necessary consolidation process, we need to focus on strategic growth programs. This will only be possible through solidarity. Otherwise, we will have enormous social unrests and fights. So what we are talking about nowadays, ladies and gentlemen, is a redistribution of wealth. This is what we are talking about in reality. Pan-European solidarity, and in a second step, increased European integration, is the only way to avoid a lose-lose situation, and I would even say to reach a win-win situation out of the current crisis for all involved parties. Thanks for your attention.